Yo, what's goody? Alright, so today we're going to cover stocks and how to read the charts correctly. I've had numerous people ask me recently to make a video about this, so hopefully you find this one helpful. And don't worry, I'm not like these other gurus that take light years to explain the damn points. I'm just going to get right up into it. Now, first and foremost, the app that we're going to use is called Webull, W-E-B-U-L-L. I'll put it up here on screen too. It's an easy app to understand, and if you follow my advice, I can guarantee we'll make your money back for you. Disclaimer though, before we go any farther, in order to use this, you need to be 18 and you need to have a valid form of ID so they can verify it to you for tax purposes and whatnot. And you will have to invest a little bit to start, but this part should already be obvious. Important tip to remember here, and I would make note of this, day trading is only available during the daytime. That's 9 a.m. to 4 p.m. Eastern time, which is my time. Now, when I first started trading years ago, I only put in $100 in to get my feet wet. And personally, I would recommend you, the viewer, to start off with that amount as well. The reasoning behind that is so you can just diversify right off the bat, but not get royally screwed, you know? This is what I like to call the trial period, because that first initial investment will kind of determine how you do on here, from there. What we are looking right now is the account tab. Here you'll be able to see literally any detail you can possibly think about. If you have an investment and you want to see, let's say, your profits and losses, it shows up right here. If you wanted to see if your account level was safe and whatnot, it shows up here. If you wanted to see like any previous losses that you've had or profits, come here. Like anything you can think of, this site has. It's crazy. Okay, next thing you're going to want to do is figure out what company or companies that you are interested in. This is something that you, the viewer, are going to have to eventually do. But for this, because I'm assuming that you, the viewer, are new, I'm going to hook you up with 3 of my personal favorite companies. And again, these are companies that have given me a lot of returns in the past, or they have treated me, just all overall good as far as investing. The first one is Rocket Companies, RKT. You might have seen commercials about this, or you might have heard of Rocket Car Company Insurance, same company. AMC Entertainment Holding Industries. If you've ever been to a movie theater before, it's most likely been by AMC. Tesla cars, pretty self-explanatory. In regards to this video, the one stock we're going to be paying attention to, though, is Rocket. Reason being, I'm currently in a trade as I'm making this video, so you, the viewer, can kind of get a behind-the-scenes look of what happens. On this screen, what we're looking at, though, is Rocket's live stock price, which is $8.67, and the option, which is this in the dark blue, that I got in for the week. Don't pay attention to this yet, we'll come back to this. Notice how this chart looks cool, but notice how it looks weird when I click this, and it looks like a Christmas tree now. Now, what we just did was we clicked on this thing. It's called the Bollinger Bands, B-O-L-L up here. If you want to see those lines again, you just click it. This is to turn it on, to turn it off. But for this video, we're going to have it on. It looks like a lot, but it's really not. In short, the Bollinger Bands, all it shows is just oversold and overbought signals. You, the viewer, won't really need to understand what that means, but you will need to understand 2 lines. This one and this one, the top and the bottom one. You notice how it comes together like in a pinch, like right here, right here, right here, and then currently, like as we're making this video, a pinch right here. When it comes together in this pinch, this is for any company at any point in time. And please, viewer, because this could make you a lot of money someday. Anytime it comes together in a pinch, there will be immediate action. Like as I'm making the video, there could be action. It's going to go up or it's going to go down. When you first start trading, you're going to want to be there for when that happens, because you can make a lot of money when it happens. But for purposes of this video, we're just going to give you an example demonstration. If you did your research on your company, the performance of that company usually hinders the stock price. It should be self-explanatory, but for those of you that don't know what I mean, if it's if a company's doing amazing, they're having an amazing year, obviously the stock price is going to go up. If they're doing really shitty, the stock price is going to go down. But again, that should be self-explanatory. These dips that happen where it just goes up and down, up and down, up and down, up and down, these are known as buying the dip, okay? What this means is you buy low and you sell high. These 2 numbers that are here are the week's lows and the week's highs, which is $7.50 and $9.57, okay? What this means is these dips is you buy low, which is your bull market, okay? Meaning those people that are in that bull market, it gives the stock a huge buying pressure, and you see how it's going up here in price. And then once it hits that bear market, that's when you would sell, because once you sell, those people are going to decrease the stock value and you're selling it for the highest possible point. So let's say you bought something for $7.50, you sold it for $9.50, you made literally a $2 profit. You see the difference there now? But yeah, that's literally what buying the dip means. Pretty simple to understand, okay? Now getting back to what I said earlier, remember that call option that I said? This right here, this is a option, this is a put, and this is for today. In simpler terms, okay, I got a put for $9 of today that the stock price was going to go below 9. Okay, a put means you're betting on the company going down. A call means you're betting on the company going up. In simpler terms, I bet that today the stock price was going to be below $9, and it is. To clarify for you, the viewer, and again, you'll know this as you trade more, I'm currently in profits. If you see at the bottom of the screen, see how this is green? But for the purpose of this video, I'm just trying to give you an example to demonstration because you're going to be seeing the same thing once you get into this. Okay? All right, and here's the example. Viewers, please do not copy this. For the record, this is not an official play. This is just purely for an example. What I'm about to show you is all fake, so please do not copy this, okay? This company is NIO Inc., okay? Their current stock price is at $8.52. Let's say by tomorrow, I have a strong indicator that NIO is going to reach $8, okay? The reason I say that is because of why? The pinch. What's happening after the pinch? That immediate action. Where's that immediate action? Going down. Therefore, I can based literally just off of that alone, the company is going to be at $8 by tomorrow. Okay. Now remember, what happens when it goes down? You get a put. Okay. So we're going to come over here to options and make sure this says puts at the top. Okay. This is all available puts that you can buy. Remember what the stock rate was. Okay. $8.50. We're going below. This is the one that you would buy. These are your contracts, what you're currently looking at. Make sure you do not make the same mistake that I did. The first time that this happened, like the very first one that I ever bought, this quantity was at 10, like it is standard, okay? It needs to be turned down to 1, like this, okay? And reason for that being is you see how it's at $30 off a default 10? Look what happens when you change it to 1. See how it goes down to $3? It's crazy, but make sure that's turned down to 1 when you buy that, okay? Then you X out of that, and once you first purchase it, it'll pop up down here like this. Okay, this is the live one. This is not the example one. This is my live one, okay? But it would pop up here, and I'll make this real simple for you, the viewer, to understand. If it's green, like this, that means you're positive. If it's red, that means you're down. If it's straight white, like these numbers, for instance, like if these numbers were white, then that means you're straight breaking even. You're not gaining, you're not losing, okay? If at any point you want to cash out, okay, all you do is come to here, click on that, close position, and one of these two. You, the viewer, will have to figure out which one suits you better. But for me personally, I find that market order is the best one. But again, you, the viewer, will have to figure that out for yourself. And then, yeah, if you make money, and which I hope you will, then you'll go positive. So that's day trading, literally explained 101. And I think, in my personal opinion, that's like the simplest way that I could have explained it. But again, if you have any comments or concerns, or if you think I could have explained something better, or even if you have any input, please drop me a comment. I would love to hear from you. But all right, I'm gonna get back to my trade here because I'm profitable. I'm gonna try and figure out what I can scalp or whatnot here. So, but hope y'all take it easy, be safe, and I will catch you in the next one. Easy.